Good morning, everyone. My name is Tommy Johnson. I'm with the Portland Regional Chamber of Commerce. Welcome to Growth Basics for Business, a monthly breakfast seminar series which provides a forum to gain useful do-it-yourself workplace solutions and insightful, actionable tips. I want to thank Eaton Peabody for their continued support of this virtual event series throughout the entire season. I'd like to welcome you all to our first installment of Growth Basics for the calendar year 2023-24. This 10-part season-long series runs from September through June. Now, today's topic, accountant or banker, which advisor is for me, will be presented by Wayne Demers from Camden National Bank. As a business owner or operator, it can be confusing sometimes to navigate whether your organization really needs an accountant, banker, financial advisor, or all three. This morning, we'll uncover a little bit more about the differences and how each role can help continue to grow and build your business. Now, like all the Chamber's virtual event signature series, today's presentation is free, and it will be recorded and made available for free replay on the Chamber's website and YouTube page. To keep up to date on all the Chamber's news and events, please visit our website, portlandregion.com, check out our events page, and sign up for our weekly email newsletter while you're there. Before we get started on today's presentation, I do want to share that we're continuing to use StreamYard for all of our virtual Chamber events. This platform provides many improved production and interaction elements, and I think you're going to be happy to see. I'd also like to remind you that if you have questions for our presenter, please type them in the YouTube chat, and they will be relayed to our presenter throughout the entire program. And we'll also save some more time for Q&A at the conclusion of the event. Now, at this point, I'd like to acknowledge our presenting sponsor of each Growth Basics for Business, Eaton Peabody. For the past 6 years, Eaton Peabody has been the presenting sponsor of this series, and they continue their support this season. I'd like to invite Marketing Manager Nate Levesque to say a few words.
Great. Thank you, Tommy. I want to thank the Portland Chamber for doing such a great job of putting these together and providing new and engaging content month after month. I also want to thank our presenter, Wayne from Camden National Bank, for joining us today. And lastly, whether this is your first Growth Basics or your 10th, I want to thank you for taking the time to join us this morning. For those of you that may not be familiar with our firm, we are a full-service Maine-based law firm with nearly 50 attorneys serving Maine clients from offices in Augusta, Bangor, Ellsworth, and Portland. We assist companies of all sizes in a variety of industries, so whether you're an established financial institution or a small business just taking your first steps, we can help with all of your legal needs. To learn more about the services that we provide and the industries that we serve, please visit our website, www.eatonpeabody.com, and also be sure to follow us on Facebook and LinkedIn to stay up to date with legal updates as well as future presentations. Thank you, and back to you, Tommy.
Thanks, Nate. Great to see you. Hope everyone had a good summer. Listen, now we're ready for our presentation, and with us today is Wayne Demers, Vice President, DCM at Camden National Bank. Wayne earned his Bachelor's of Science in Accounting from Western New England College in Springfield, Mass, decades ago. But before graduating, he began his career in the financial service industry as a financial advisor. He's continued with more than 2 decades in the financial services industry and more than a decade in banking. Throughout his career, Wayne's entrepreneurial side has always kept his free time busy, whether it's building a nonprofit, running an online retail store, or, of course, real estate. He's always balanced finance with business and has been sought out by his clients for that specific insight. The boring, drab worlds of cash flows, income statements, and balance sheets are where he thrives and gets excited every day in conversations with his clients. Wayne enjoys educating business owners in the areas of finance at Camden National Bank, right here in downtown Portland. And as they always tell him, quote, "I wish I knew more about finance or banking, but they never teach you about it in school." His passion in helping Maine and its communities thrive and grow, and hopefully you'll learn something today from him as well. And with that said, take it away, Wayne.
Awesome. Thank you very much, Tommy. And good morning, everybody. One of the largest things, I really deal with and see every single day is a bunch of questions. And quite frankly, being in the banking world, I've seen all sorts of questions. And that's really what we want to go through a bit today is which advisor is the best for you? Who do you go with your questions? And what questions should we be asking those folks? I'm going to go through a little bit about my background. As Tommy has already covered a bit of it, there's a little bit more detail to it, of course. Looking at a financial advisor, looking at an accountant, and of course, a banker. and really what questions we should be asking those folks, and the questions that I've heard in my time, really where they should be directed at, as well as, of course, a Q&A. I also want to make sure everybody here that's on, feel free to ask any questions you have throughout the entire presentation. I'll gladly answer anything that you have. And there's going to be questions that are going to be sparked by some of the pieces that we're going to cover. So please type those in the chat. It'd be greatly appreciated. So starting off a little bit about my background, like Tommy had said, I have my BS in accounting at Western New England College down in Springfield. It was so long ago, it was Western New England College. Now it is Western New England University. I had a minor in finance, and of course, loved the two combined, how they work together and all the pieces that were there. Been in the financial services industry for over 20 years. That's where the gray in my beard comes from, as well as from my kids and as well as in my hair. And in those 20 plus years, I've been a financial advisor, been in banking. It's seen a ton of different things. And throughout those 20 plus years as well, still maintained being a business owner as well as an entrepreneur. Between a marketing company that I ran for 5 years, real estate company that my wife runs and I help, of course, with, and then nonprofits that I'm a part of. I've learned so many different pieces throughout so many different industries. It's really one of those reasons why I wanted to have this conversation and really, bring these questions to light for a lot of folks. One of the reasons, major reasons why I'm here is, of course, my wife, Jessie, think of Demers. She's a realtor, as I was saying. She's in real estate, and she's been doing it for more than 15 years. And then my kids, Meadow and Koa, down there on the right. Um, the biggest reason I got into the accounting world, banking, financial services industries, really is because of lack of education that I've seen in my time. There's so many resources out there that a lot of folks don't understand what there is to approach. A lot of folks are afraid to ask questions, and a lot of folks just don't know where to go to. And so that lack of education for businesses, business owners, is really one of the biggest reasons why I'm here. My parents were divorced when I was 13, and one of the biggest reasons, as it is nowadays, is because of money. Quite frankly, they never really spoke about money, never really talked about budgeting, never went over credit cards or how credit works, any of those features. And it's one of those things that I really drove me to get into accounting, banking, and so on. So just from divorce.com, 25% of divorces are because of financial troubles. See that happen, of course. And those are recent numbers. And then the SBA also is talking about how businesses fail. 50% of them fail within their first 5 years because of insufficient capital, poor credit arrangements, and too much debt. So the reason why I studied accounting, I had a CPA neighbor back way back, and of course I had that project back in high school that was, what do you want to be when you grow up? Well, my teacher took it to a different level and said, now you have to interview somebody in that world. Luckily, my neighbor was a CPA, so I sat down with my neighbor, and he looked at me and he goes, "Do you know why businesses fail in the first 5 years?" I said, "Absolutely not. I'm in high school. It's definitely not something I've ever thought about." He brought it to light. He said, it's not because their product, their service, the individual that's running that business has that passion. It's not because of those reasons. It's usually because that business owner doesn't understand how the money works. And if you understand how the money works, you can solve a lot of those problems. And these statistics, from the SBA, prove that fact. And this is decades ago that, of course, I had this conversation. So financial advisors, let's look at financial advisors at first. Financial advisors really, they have the comprehensive plans that are for various life stages for their clients. They look at investments, retirement planning, insurances, estate planning, all the different pieces that are involved. And their primary focus most times, And I know this is different across the board, but most of them focus on retirement planning and investments. Some of them also have insurances. Some of them focus more on insurances. They're all a little bit different. Investment guidance is a huge part to that. Some folks will educate you. My personal favorite are those that will educate myself or individuals, because if you teach me why I should be doing something or why it is that something's happening, I'm more likely to do that. So I've learned the best definitely over time from those things. And all that investment guidance is great. But if you're explaining to me the reasoning why we're doing these things, that's just going to help me in the long run that much more. They, of course, are going to look at risk assessment. This is pretty much across the board nowadays. Evaluating your financial risk and your tolerance. They have usually some sort of a questionnaire to go through and make sure that you're falling in line with a specific bucket or type of investment risk. And that way they can make sure they're making an educated decision. Estate planning and high wealth options are different for every firm. That can be as simple as, hey, what happens if I pass away? What's going to happen with succession planning? Do we have beneficiaries on these accounts? And the majority of investments have some sort of beneficiary named or labeled in there. It's very rare to ever come across it. It's tough to say in more than a decade in banking that I've actually come across some sort of a retirement plan that didn't have a beneficiary, but I'm sure it's out there. And at the same time, too, the high wealth options, when it comes to folks that have millions and millions of dollars or millions of assets or complex situations when it comes to running multiple businesses. And we see this all the time. Here in Portland, we work with folks all across the country, and there's all sort of complex situations and issues where a really high wealth advisor is beneficial. They're all a little different in how they manage things and how they manage the relationship, which is a super important part when it comes to making sure you're building that relationship and leveraging those assets that you've built to maximize returns, growth, build upon those assets, whether it's buying a business, whether it's buying more properties. There's all sorts of options there. And really, the questions that I've seen and heard, and those pieces that I feel are the most worthy for folks to be asking their advisors are, what qualifications do you have? What credentials do you have? Are you a CFP? Are you a CFA? Are you a certified financial planner? Are you a certified financial analyst? Those are different levels of credentials and qualifications that will tell you more about what their focus is and where they've come from and where they're looking to go. And that is all important to your journey and what your goals are, because that could take you in the right direction or it could take you in a different direction. How long have you been an advisor and managing clients for? A lot of times I want to learn how I'm going to be doing something from Mr. Miyagi, not one of his students. That being said, of course, over time, Mr. Miyagi doesn't live on forever, but what kind of experience do they have? What industries have they worked in? What types of clients have they worked with? Those are important pieces to think about. What is your investment philosophy? Pretty simple, plain. Tommy, all right. Is there a typical formula for a young startup business to follow when selecting an accountant versus banker? Excellent question. We're going to cover that a little bit further on down the road, okay? Great question. I'll make sure I cover that. What is your approach to financial planning? Another big question. How do they go through the process? Do they have some sort of program that they build and that they follow up with every 6 months, every year, every 2 years? Everybody's a little bit different. Going back to question 4, how much in assets do you manage? This is a little bit of a brash question to ask, but this is going to tell you a little bit more about what they have for experience. And that's super important to me. Like I said, I want to make sure that I'm working with somebody that has some experience. Not necessarily that somebody that's brand spanking new, somebody that's brand, green in the system or in the business. Don't get me wrong, people have to learn those pieces, but in all reality, your situation is different, and it might fit for you, it might not fit for you. What is your strategy for tax efficiency? And this goes along with number 7. Will you work with my accountant? So strategy for tax efficiency is something I run into all the time because my background, being in accounting and the fact that I've done tax returns, both for businesses and individuals. It's kind of led me through this part, but don't get me wrong, I definitely don't want to do any taxes right now. And no offense to anybody out there that does taxes, but this is something that can either hurt you or help you. Um, and your strategy really, the big question I'm going to ask with this is, will you work with my accountant? Because you may, as an advisor, a financial advisor, may understand the basics, but as we've all seen with the pandemic, laws change. The IRS has changed things, the government has changed things. Most financial advisors aren't going to be on top of those things like a CPA or somebody, in the accountant world. Most. That doesn't mean that all of them, that all of them are, and there are some that are excellent that are actually on top of things. It's different for everybody. Do you have a written code of ethics or financial duty? Really, I want to know if they have a fiduciary responsibility, or how are they going to be managing my money? Unfortunately, in my experiences in the financial world, one of the firms that I worked with, it was something that we ran into where folks would be in the office every so often, from various fund families, and they would be explaining the reasons why we should be setting up these funds for investments and for our clients, and these funds for them, and where we would benefit as advisors. Didn't like that. That's one of the reasons why I got out of the world. But that does not mean that everybody operates that way. And that does not mean that every financial advisor follows that as well. So that's the important side to it, right? But I want to know, do they have fiduciary responsibility, or what they're basing their code of ethics on? Let's look at accountants. So accountants, there's primarily 3 different types of accountants. If we eliminate the government side of things and some of the other pieces there, I'm really keeping out tax attorneys, because tax attorneys are a little bit different and specific for what you need. For most businesses that I work with, or most businesses that I've worked with over my time, these are the 3 primary types. There's bookkeepers, tax advisors, and CPAs. They're all a little bit different. Bookkeepers really focus in on the day-to-day record keeping and reporting. They're going to record your transactions, maintain ledgers, do bank reconciliations, financial reports, and check for data accuracy. That's their major side to it. And a lot of times, bookkeepers will use some sort of QuickBooks. Now it's really QuickBooks Online, seeing as how they've gotten rid of, the actual desktop version. And how do those pieces work for you and for your business? Now, bookkeeper is different than a tax advisor. Tax advisors really specialize in the tax planning, preparation, and compliance. And they help both individuals and businesses really navigate complex tax situations and tax regulations. They really just focus in on the tax planning, prep, and compliance. And sometimes they mix together with bookkeepers, and sometimes they do both. I have many accountants within my network, and I have some that have started off really with both sides of it, the bookkeeping as well as the tax advisory side, and they're shying away from the tax advisory side because they don't like the hectic side of things when it comes to beginning of the year, getting ready for April, or when there's extensions going out, stuff like that. They don't want to focus in on that area, so they're focusing in on bookkeeping. I've also seen the other side of it, where folks don't want to do the bookkeeping side; they're moving into more of a tax advisory side. There's both pieces to it, and really, The big difference is your tax advisors, they're just going to focus in on your taxes. That's the major side to it. Enrolled agents are a specialty. Most enrolled agents aren't CPAs because of the different pieces that are there. Enrolled agents are IRS's really highest credentialed um, advisors when it comes to tax advisory. They actually take special tests and whatnot, and that's how they become an enrolled agent. Excellent folks to work with. And everybody's a little bit different when it comes to giving you advice. Some may not. Um, that's where it comes to the question side of thing. And then CPAs, a combination of multiple fields of accountants. The big difference with CPAs is not only have they done additional learning requirements when it comes to getting their actual CPA, and that's different in every single state. And when it comes to the state, what number of credits that you need to get for education, if there's reciprocity when it comes to having that CPA qualification. If you're a CPA in Massachusetts, does it qualify you as a CPA in New Hampshire? I don't know this very, very specifics when it comes to those pieces, but it's one of those situations where the person has a CPA, they've done that extra work. And not only that, but they're required by the state that they are in that they have 20 to 40 hours of continuing education credits each year. And that's in the state of Maine alone. That's 20 to 40, and somewhere around there. Every state's a little bit different. But that continuing education is such a big thing because that's where they get the updates on tax laws. That's where they get the changes and processes that are out there that maybe the pandemic happens and creates these changes that helps businesses or things that might be an actual benefit for businesses to take advantage of. Auditing, accounting management, account cost accounting, management accounting, and financial analysts. Those are kind of in that CPA area as well. CPA firms will usually have those additional services for a business. So they might also take a look at cost accounting is a great spot. That's one of my favorites actually. And really one of the reasons why I love looking at cash flow. Um, what is the true cost of your service? What is the true cost of your product? A lot of businesses will shoot themselves in the foot because they'll take a look at, well, this is what number everybody else is charging. I'm going to just charge a little bit less. That might not work when it comes to profitability. And that's one of the biggest things you run into, I think. Considering accountants from bookkeepers to tax advisors to CPAs, is one specialty more geared to a specific size or age of a small business? Excellent question. That is dependent upon the firm. And that's one of the things that on the questions that I would ask. Do you normally work with brand new companies? Do you normally work with seasoned companies? And that's kind of a part of number two. What industries do you work with? This is something that I've seen greatly over the past 5 to 7 years. Businesses are really, and accountants are really focusing in on specific industries because of the tax law changes, because of the different, people like to call them loopholes. They're focusing in on various industries and staying away from certain things. So, once again, what qualifications and credentials do you have? Are you CPA? Are you CMA? Those pieces. What industries do you work with? There's plenty of folks that I have in my network that won't work with restaurants because they're so transaction heavy. There's various issues that might pop up or that they've seen over time that they just don't want to be a part of. There's all sorts of reasons, and it's an excellent question to ask, and really find out what it is that's going to be the right fit for you. Generally, when I'm working with a client and they're like, I need a new accountant or I need an accountant, do you have an accountant? When it comes to me referring to somebody else into my network, I'm looking at this. Are you a new business? Do they work with new businesses? Are you a seasoned business? Are you in the construction industry? Are you in a restaurant? Are you working with multi-units? All these different questions really lead you down the right path. And that's one of the reasons why you don't just have a network of one accountant, or myself in particular, is because they're all focusing in on different things. Do you work with nonprofits? Excellent question. If you're a nonprofit, you must ask this question for sure. And there's a lot of accountants that won't work with nonprofits because of the laws, regulations, all the different pieces that are involved there. And accountants are businesses too. They have to figure out where they're going to spend their time to make their money. And that's one of the big pieces that you can run into. Now, there are, of course, there are accountants that do take clients for nonprofits. There are fewer than there are when it comes to other industries, but they are out there. What deductions or credits can I take advantage of? Now, this is such a broad question, but it's basic to your industry. And each industry is going to have its own pieces to take advantage of for deductions or credits. Um, there's going to be all sorts of situations, and this is going to be one of those questions that's really going to tell you a lot about the accountant that you're possibly going to be working with. Just like a financial advisor, just like a banker, you're interviewing them as much as they're interviewing you. And that's one of the super important things to keep in mind. They don't have to work with you. You don't have to work with them. And this is why you want to ask these questions. Do you know of any grant programs? Some accountants love grant programs and have some excellent knowledge based upon those. I think a follow up to that too is, do you know any grant writers? What is your approach to managing audits or IRS inquiries? People shy away from this question all the time because of the simple fact that they don't want to think of the worst. And in all reality, you should be ready for the worst, because if the worst happens, you got to jump on it, make sure it's taken care of. The IRS isn't going to stop. It's one of those super important things that you need to cover with your accountant, what their process is, how they do it, how they dealt with one in the past, and what are the key financial metrics that I should be monitoring for my business. I think that is something that folks, they don't want to even talk about it, because financials, metrics, all those pieces, they're just out of most people's realm. They don't want to think about them. A little bit of education can go a long way here. Understanding what your current ratio is, how well your debt ratio or your debt coverage ratio is. Those pieces can go a very, very long way and get businesses past year 5 to 7 to 10 to 15. I think the SBA says that 20% of businesses make it 15 years. Those little pieces right there, and those business owners that I've worked with over my time that understand these pieces, really make a huge difference. And that conversation doesn't have to be a long, drawn out conversation. It can just be some simple pieces that can really make a huge impact. Now let's look at bankers. Bankers, there's so many different types of banks, right? You got credit unions, savings banks, mid-sized banks, large banks, the extremely large banks. There's so many different kinds out there, and they're all different. They all have to follow different rules, regulations, depending on how big they are. And it's one of those situations where you got to figure out what's right for you and for your business. Not only that, but is the banker right for you or your business? So always, bankers and banks in general are going to help you out with borrowing, security, and cash flow solutions. A lot of people forget security. There's a lot of pieces that are involved, especially nowadays with fraud, and this can make or break your business. Quite frankly. So borrowing, the lending solutions for your business are either collateralized, meaning there's some sort of an asset that's really that collateral for that lending, or unsecure, uncollateralized. It might be something that's just based upon your credit. A lot of people forget or don't know that your tax ID number, your EIN for your business, actually has its own credit attached to it, separate from your own personal credit. But most times when it comes to doing any sort of lending, a bank's going to look at both what's the credit for the business, what are the cash flows, those pieces, and how does the individual's credit relate, and where does it rank, where do the numbers, when it comes back, because they're usually a guarantor. And that's the majority of lending that's done. That doesn't always fall true for all types of lending, but just as a general piece, that's really common. Credit management, credit score solutions for various business stages. This kind of goes in line exactly what you were talking about with Tommy. Um, you know, if I'm a new business, right, my EIN's brand new. It doesn't have any credit built to it at all. But as a guarantor, I may already have built up my credit to a level that works out in my favor. Maybe it's the other side of it. I've worked with business owners on both sides. Some rebuilding their credit, some of them that are excellent credit. It's different for everybody. I think one of the most common things I've seen over the past 3 years, 4 years, is folks that are leaving their primary business, meaning they're leaving their job and they're doing something on the side, like construction, for instance, or landscaping. They're working for somebody at this point and they're saying, you know what? I can make more money if I'm my own boss. I can do just what my boss is doing. I just got to do it myself and I can make that much more money. What happens is then they quit their job and then they go start their own business. Really, really puts them at a humongous disadvantage because they no longer have any income because they left their job. And so how are they supposed to get a loan or a line of credit or something like that when it comes to starting the business with some starting capital? I look at it like, if I'm thinking about the construction industry, I had a gentleman I was working with who was doing exactly this. I said, Keep your job, make sure you stay there because we need those pieces in order to get any loans, lines of credit, get that stuff set up first, get things moving in the right direction for for your own business, and then when you feel comfortable and you've already built up that book of business, then we'll move things over, and you can then quit your job, that types of situation. Because you think about it, right? A piece of equipment in the construction industry, if you're buying a dump truck or a skid steer or something like that, and you quit your job and you start this new business, you're essentially like looking at getting a mortgage without having any income or any job because of the amount of that loan or line of credit. You're essentially doing that, and that's the worst when it comes to working with any lenders, because we have to make sure that there's a debt to income ratio that works, and at the same time to the credit side of it. Those are two major areas that are going to be looked at. And some institutions will have credit management and credit score solutions for those stages: mortgages, lines of credit, equipment loans, credit cards, etc. I mean, there's so many different things that you can do when it comes to borrowing. Each institution's a little bit different. Security, like I said, huge thing nowadays, huge topic. Is the banker you're working with, do they understand the various areas where you're vulnerable to potential fraud? And do they have solutions for you? Do they understand those solutions? Is another excellent question, or another excellent piece to look at. Because just as simple as handing out a check to somebody, you're literally giving out your account number to whomever you give that check to. It's like I walked up to you on the street and said, I want you to write down your name, your address, your phone number in many instances, your routing number, your account number in the bank that you have your accounts at, and write that down on a piece of paper for me. That's exactly what a check is. And a lot of people don't realize that they're potentially vulnerable when that happens. So there's different programs, there's different pieces, there's different solutions when it comes to those areas and ways to help protect yourself, protect your business. It could be something as simple as creating a separate account for any of those Venmo transactions or PayPal transactions that you're going to be doing or receiving. I run into it all the time with Airbnbs where, they don't want to create a separate account. Well, if Airbnb is hacked or compromised in some way, shape, or form, unfortunately, you're probably not going to be somebody they're going to contact. So, what happens when that fraudster decides to take money out of your primary operating account for your business? Or worse yet, and I see this with Airbnb specifically so many times, your primary account for your household. How do you handle that? How do you protect against that? How do you mitigate that risk? This is why you have those conversations. So there's different cash management solutions, treasury service options. There's a lineage of different services out there. Cash flow solutions. This is what I love. Understanding how a business's cash flow operates to maximize that cash flow, the inflows, the outflows, all the different pieces that are there are super essential when you're working with your banker. It's one of those questions or one of those conversations that one, a lot of bankers aren't comfortable having. um, they're just not familiar with it. Unfortunately, the banking industry in general has turnover, as many people I've heard over the years. Um, it happens. And unfortunately, folks don't have that experience when it comes to cash flow and understanding those solutions when it comes to working with businesses. Merchant services. How am I accepting payments? That could be credit card machines. That could be something online with a pay link. There's all sorts of different pieces and emails. Online bill pay, things like positive pay are those options that I have to help protect myself, to maximize also my cash flow, to get money in my account that much faster. When you're working with a check and you receive that check, number one, you receive that check, you're taking responsibility for that check. And I've seen this happen in my time where folks have accepted bad checks, and not bad checks from the fact that there's insufficient funds in the account and the check bounces, but I mean bad checks from the aspect that they're fraudulent, and they're coming from a fraudulent source, and they're looking to really just defraud the company or person they're working with. And when you take that check, you're accepting that responsibility. A lot of businesses, a lot of folks don't understand that that can look very badly on you and your business. You could be a long-time client of a bank, and now all of a sudden you've accepted a fraudulent check that's say a $25,000 check that's fraudulent. That could completely break the relationship with the bank. And the bank could potentially say to you, you know what? I'm sorry. We don't want you as clients anymore. We're not going to work with you anymore. Here's the money that you have in your accounts. Please don't come back again. I have seen that happen at multiple institutions. And it does. It's just one of those things that folks don't realize or don't understand is when you're taking that's really all on you. So, some questions asked bankers. What solutions do you have for business cash flow? You're going to know when you ask them that question whether or not they understand business cash flow or not, and whether or not they're a banker that you want to be working with. Do you have credit building solutions? Are there things to help you build your credit when it comes to being a brand new business or when you're trying to rebuild your credit? What does the banker really understand about credit and how it works? Or do they not understand that at all? Can you help me with business planning and strategy? So, this is a question I think a lot of people just don't ask their banker. A banker, an accountant, and a financial advisor are yes, they're all different people. They are, and that's very clear. That's one of the reasons why we're talking about this. But bankers look at business planning and strategy in a different way. Like I said, it comes to that fraud, when it comes to the cash flow, when it comes to all the other pieces that affect those, that's where they're going to look at for you. Well, that's where they should be, I should say. What documentation do I need to provide for an application? So whether it's, a last 2 years tax returns, personal tax returns, and business tax returns, which are pretty standard when it comes to most applications. Or it just might be as simple as an application, depending on what it is that you're looking to apply for, how much you're looking to apply for. There's all different pieces there. But they should be able to tell you what documentation you need. Do you provide financial planning or investment services? So a lot of banks nowadays will actually work with yourself to do your investments and the financial planning side of things. It's an easier way for folks, and for especially when it comes to businesses and personal or consumer side of things. It's a very easy way to make sure that things flow smoothly. Because if I'm here at the bank and I get a check from somebody that's, say they have a Fidelity account and they bring that check over from Fidelity, which literally down here in Portland is right across the walkway here, that check's going to take some time to clear. So that's going to slow things down for how fast you need money. Or maybe the money needs to be wired in. So that's could delay the timing of things as well. If I am actually have everything in that one financial institution, that all could flow through that much faster. I've seen situations where I've worked with investment advisors, um, and that money has been the assets have been sold, money's been put in the account by the end of the day, all because it's within the same financial institution. There's ways to speed things up, and this is why it's important to ask that question. What options do you have for remote business operations? The world that we live in nowadays, people are all over the world. They're all over the globe. Can I work my business? Can I do my banking from my couch in Bali? Or do I have to be in front of you to make things work? What solutions do you have for taking payments? Simple, basic question. But if you're operating things with all in the same financial institution, this is once again one of those things that can speed up cash flow and can help the business that much greatly, that much more. What types of accounts do you offer? What are the fees for those accounts? Many times, most bankers they know very well the consumer side of things, and this just unfortunately they don't have the banking experience on the business side of things. So when this question's asked to a banker, they might not know the business side of things, and this happens at the majority of financial institutions. um, Not always true, of course, across the board, like I was saying before. But this question right here will tell you how much they know and how much they understand about the accounts that they're going to put you in. Now, the majority, and this is just, you know, a blanket statement, the majority of business accounts and personal accounts are going to have fees and account balances that are all kind of within the same area, maybe a couple $100 to, a couple $1,000. They're all kind of in the same realm, because that's the way most banks work. Is they're going to mimic what they have for competition to make sure that they're appealing to more and more people. How often will you meet to review my finances and plans? So that question right there is going to tell you how much they are invested in you and your business. And that really is a great question to ask to make sure that you're setting up the long term. Some folks are just there to get the transaction done and that's it. Other folks are there to help you out, and really get you to where you want to be. And this is one of those questions that can help you separate those two. Now, that being said, that doesn't mean that the person that's just there to get the account open isn't the right person to work with, because it might be a situation where you do just need to get the account open. Most cases, it's not that situation. How does my business and personal accounts relate? So this is where you'll understand the expertise, the background, really the areas that the banker understands how your business accounts and your personal accounts mesh or don't mesh. Um, Goes right back to that question or the other question. Do you provide financial planning or investment services? Understanding business cash flow really integrates all these questions into I love that question specifically because understanding how the personal side and the business side work, because so many business owners, what they'll do is they'll set themselves up at one bank with their personal, and they'll set themselves up with a different bank for the business. And then all of a sudden you run into cash flow problems when it comes to moving money from one place to the other place or whatever it may be. um, Having that conversation is important, and understanding that if I'm bringing a check from my business account, number one, it's got to be made out to you personally, not the business. Because if it's made out to the business, then it has to go into the business's account that has the same name. But understanding that could take a couple days, a few days, depending on the size, depending on the on the institution. It could take a few days to clear. It could take a week to clear. All those things are super important to understand and know before you get into that relationship, because it will happen. It's inevitable. I've seen it so many times where folks are like, "Yep, don't need to really worry about that. I'm here for my business. I'm here for my personal, and this is what's going to happen." And of course, it doesn't happen that way, or they need funds right away, and things are slowed down when it could have totally been avoided. So, which advisor is right for me? When it's all said and done, you should have each one of these advisors. It's a trick question. You're going to need each one of these advisors in different ways at different times in your business's life cycle, in your careers, in your life. You will need each one of these. How you use them, when you use them, that is the important side to it. I would say the earlier the better. Probably the most scariest time in my entire life was when I was a financial advisor and I was hiring an assistant. I didn't look at it initially as an investment into my business. I really did not. And then when it clicked in my head and I was like, "Oh my gosh, this investment is going to be worth it," I doubled and tripled my revenue, my income. This is the same exact thing. This is an investment in yourself. Financial advisors, accountants, and bankers. Yes, most of these, the bankers, for instance, um, they're usually going to be free. Now, yes, you may pay fees for accounts, you may pay fees to have certain services. Same thing with the financial advisor, same thing with the accountant. You're going to pay these fees, but they are investments in your business. And you talk to your accountant about it, but those fees may be tax deductions and expenses for the business. So that's the important side to it, right? These pieces could be beneficial, and they are beneficial for each business no matter what life stage they're at, whatever part of the life cycle they're at. They are very, very important. The financial advisor, of course, is going to help you, just as a recap, with retirement and estate planning, investments and insurance services, as well as wealth services to leverage all your assets. The accountants, your day-to-day business transactions and record keeping. That's where you're going to look at a bookkeeper. Tax prep, planning, and compliance could be a bookkeeper. Most likely, it's going to be a tax advisor, a tax accountant, or a CPA. And of course, the financial statement review and planning. That would be as well something that you're going to run into when it comes to the tax advisors, uh, as well as CPAs. Bankers, they're going to deal with your day-to-day transactions, ease and security. That's a huge thing, of course, when it comes to the cash flow, the continuity of the business, the efficiencies, and borrowing options within your business plan. I think that's a part that people forget, is to stick to your business plan and what you need and what you're going to do within 5 years, not necessarily what you need to do this second. There's all sorts of things when it comes to that. So in that light, I'd like to open up for questions. We've had a couple of great questions. I hope I answer those questions for everybody. But love to open it up for questions at this point. Give it 5 minutes for questions, or 10 minutes for questions, and go from there.
Yeah, Wayne, thanks for a great presentation. I know I've got many questions. I want to let the folks that are watching over on the YouTube side ask some questions. We do have about a 10-second delay, so if you do put a
Sure.
question in there and we don't get to it right away, it's just because we have a slight delay. But you did answer my question that I asked earlier on, which was, is there a formula, for the young startup business to really follow when they're selecting an accountant or a banker and financial advisor? And that makes a lot of sense. Like you said, during the life cycle of a business, you're going to need all three. And maybe in that particular order too, financial advisor, as you presented it, to get a bigger scope of what you're doing. And then as you're getting into more of the day-to-day, is that sort of the recommended flow that you would foresee for a lot of newer startup businesses?
I really would run the opposite. I would really run with the banker. Make sure you have a solid banker and bank that you're working with. Then your accountant, which is super important when it comes to everything else that's involved. That they'll control really what's going on with the money, where you're benefiting, where you're profiting. It's a huge piece to it, of course. And then the financial advisor, I think, is the other huge piece that you don't necessarily have to jump on the financial advisor like right away. The sooner the better, though, because what'll happen is they'll understand your plan and they'll understand where you want to go, what you want to do, and they can get you on track faster. And the biggest thing when it comes to investments, and the most common thing, if you were to ask folks that are in their 60s, 70s, what do they regret? What's the biggest change they would have made when it comes to their investments? The majority of them say, I wish I started earlier. And if you were to ask me that question, I would tell you that same answer. It's one of those situations where I wish I had started when I was 18, 19, or even better yet, my parents had started investments for me, and built things up. So I actually started investments for my kids. My son and my daughter, they're 3 and 2. They'll have plenty of money when it comes time for them to actually retire. So, thank you, Maureen. Thank you. I'm lucky enough that I've had experience in all 3 areas, and I have networks of all 3 areas. So that's why I feel very strongly about these things and these questions. These aren't necessarily questions that I've come up with or heard. There's also compiling questions from my resources, my network of folks that are accountants, that are financial advisors, that are bankers. That these are kind of those pieces as well.
Well, Wayne, I don't see any other questions popping in right now, but we'll give it a second. But, in the meantime, I do want to thank you for an absolutely great presentation, great way to kick off our season. And I wanted to thank you. And again, of course, thanks to our chamber staff for helping to produce another successful event. And thanks to each of you for attending today and throughout the year. And if you're interested in learning more about this topic, be sure to check your email for a follow-up message with some links to additional resources. And Wayne's contact information will be on there as well. So, again, just a shout out to him and his organization. If you do have a need to consider someone who has Wayne's background and skills, great resource to be able to utilize.
And at the same time too, Tommy, I want to open up for anybody. It doesn't make a difference of whether you're with Camden National or a different financial institution. These are conversations I would gladly have with anybody. So don't be afraid to reach out. I'll gladly answer any questions that you have and guide you in the right direction. I have plenty of folks that aren't technically clients here at Camden that are folks that I work with. So don't be afraid to reach out. There's no wrong question to ask, and there's no wrong time, to reach out. So that's my cell phone number as well. So don't be afraid to reach out via my cell phone. Like I said, my wife's a realtor, so she understands when the phone rings or text messages are going off in the middle of the night. But don't worry about that part. And thank you, Tommy. Tommy, thank you. Thank Riley. You guys are awesome, and everything that, this is an excellent series. I think that will add a lot of value to the community. And that's one of the reasons why I was happy to jump on.
Excellent. Well, great way to kick off the season, like I said, and thanks to everybody involved. And just one more shout out to our sponsors, Eaton Peabody, for their support of the Growth Basics series for the entire season. We look forward to seeing you all again on October 17th when we plan to have a presentation on the topic of diversity, equity, and inclusion in the workplace. The Eaton Peabody Growth Basics for Business series is typically held on the third Tuesday of each month from 8 to 9 a.m. So with that, have a wonderful rest of your day, get outside, and enjoy the last days of summer.